Hello, everybody, and welcome back to the latest Fintech P50 webinar. I'm very happy today to be joined by Shameek Kundu, Head of Financial Services and Chief Strategy Officer at Truera. Shameek, how are you today?
I'm well, Tyler, and thank you very much for this opportunity to speak to you.
Yes, thank you. Well, thank you very much for taking the time to join us today. We're going to be talking a little bit about banking today and how that works with some of the industry's most contemporary technologies. It's all very, very exciting and, of course, very topical at the moment, given the current financial climate. So it's a real great pleasure to be joined by you today. Now, before we get on with our questions, we better give our audience a quick insight into who you are and where you're coming from. So, Shameek, why don't you tell us a bit about that?
Sure. So as you mentioned, I'm head of financial services at a California startup called Truera. We're also present in Singapore, where I'm based, in Europe, and including the UK and elsewhere. The startup itself is focused on increasing trust and transparency into artificial intelligence. It's not limited to financial services, but most of our early clients have tended to be in this sector. I'm also the first ever client of this startup. So before joining them, I used to be Group Chief Data Officer at Standard Chartered Bank, where I've worked around the data and analytics space over a decade. So that's really me. In addition to my work on the commercial side, I also have been working with regulators in this area, including being part of the Bank of England's AI Public-Private Forum and the Monetary Authority of Singapore's forum in this regard. So it's a space that I'm quite passionate about, and as I mentioned, I'm delighted to speak to you about this topic today.
Well, yes, thank you very much, Shameek. And you're absolutely right. Artificial intelligence has really become a staple of the fintech world and has gained an increasing application within the banking industry, as you highlighted in your introduction. AI enables banks to be able to solve problems, provide new features, and create new insights for their customers and their journeys. With this webinar, we aim to explore how AI is being used within the banking sector and the benefits that are to be seen from that application. We will explore how AI is changing banking and what is still to come. So, Shameek, with my first question, I'm really interested. Obviously, you've had a very decorated career working for lots of really big companies. I'm just really interested to know what the current landscape of AI within banking currently looks like.
Sure. It's a great question, and it probably doesn't look like what most people think it looks like from the outside in. Why I say that is I think when you say the words artificial intelligence, most people think about image recognition, a lot of automated text processing, customer experience is transformed entirely. So a lot of customer facing stuff is what people often think about. The biggest uses of AI to date have actually all been in the back office. There have been some customer facing ones, which I'll come to in a minute, but the big areas of early investment have been around fraud, around cybersecurity, around all kinds of financial crime detection and mitigation, as well as actually to some of that text recognition, very basic boring old automation of reading from documents, etc. Now, that's where the money, the return on the investments have come from so far. That doesn't mean that is the end all of all innovation in this space, but that's where a lot of the early action has been. And I think almost every bank and fintech would have been using machine learning techniques in those areas. Now, the more exciting areas, depending on where you come from, you talked about transforming the customer experience. Some of that is happening and has been happening actually more outside banking, but now banks have also picked up, is for example, in the onboarding journey or the KYC journey, you won't think of it as AI, but if, for example, while I was at the bank, in one of our markets, we would use facial recognition technology on your face and then on an ID card to make sure that you are the same person, and that would dramatically speed up the entire onboarding process. Do you think of that as AI? Well, that's just a basic get your selfie taken and get yourself recognized, but it is actually AI at work, very much so, and it is transforming your experience. So I guess the next major way, which it's not fully worked across all the areas, is of course how the customer experience transforms itself. And part of that also is the personalization you get as an individual, which many of us do get even outside banking as well. The flip side of that, of course, is also allows banks to market in a much more targeted manner, in a way that ideally, if you use it properly, you're adding value to your customers, etc. But neither of these, neither the back office nor the customer experience, in my view, is the place where AI can have its most transformative effect for this industry. And that takes us to, I really like the way you framed, I don't know if you remember the phrase you used. You started with the problems it solves, and then you finished with customer experience. Actually, it really boils down to that. I mean, ultimately, as an industry, banking does well for itself. It's arguable whether it does as well for all of its clients, but as an ex-bank person, I would say yes, it does. But we've all been aware of certain fundamental issues that we've not been able to crack. I mean, I talked about financial crime a little bit, but the fact that strict anti-money laundering laws, etc., have prevented access to payments, to even basic banking accounts in many areas, including ambassadors being denied bank accounts in certain instances. Right? We know as an industry that it's an issue. It's absolutely a problem we need to solve in a much more efficient and effective way. Today, the industry does not detect as much financial crime as it wants to, and yet is extremely inefficient about it. Spends hundreds of millions or billions of dollars on it, and causes the customer experience to suffer. So how do you crack that problem? How do you crack the problem of financial inclusion, particularly an issue in the parts of the world that I've worked across, Asia, Africa, and the Middle East, and perhaps in Latin America as well? Billions or trillions of dollars of credit is offered, but there's also several trillion. Somebody quoted the 8 trillion figure to me, saying small enterprises have that big a funding gap. Again, the industry knows that these issues exist, but we've not been able to address that in the past. So if you take that hierarchy of needs, Tyler, I'll stop here. It's most of the early easy hanging fruit was in the back office, in the back room. There's a lot of promise and excitement around what it can do for the customer experience, and I think some of it has been done. But the real value will come when AI can help transform the way banks, or those who are offering banking services, whether they're called banks or not, are addressing these very critical problems, particularly around financial inclusion and around managing financial crime and fraud issues at scale. And I'll just stop with one last thing. I haven't used the word risk so far, but a lot of this last block, the last frontier, is all about how AI enables banks to manage their risk envelope differently. I said this, I think now 5 years ago or 4 years ago to the Financial Times while I was still at the bank. AI is all about, the real value of AI is all about expanding the safe space in which banks and fintechs operate by being freer to operate in a much bigger risk envelope. You're going to serve more customers. You're going to provide more products to customers that you already have, but you couldn't serve yesterday. For example, you couldn't give wealth management services to a vast multitude. Now you can, because AI makes it possible. So that's the area where I think there's still transformative potential. A lot of AI's early focus has been on incremental improvements in those early, low-hanging areas.
Well, you've painted a very, very fascinating picture of how AI is being used. And you've also done really well to demonstrate its many different use cases within the industry. Now, being from such a banking heavy background, you must be aware that there are such a spectrum of different banks in the market today. We see a lot of challengers, a lot of neobanks. Of course, the incumbents are still there. All after COVID, of course, their identity and how they're working with their customers and within themselves has completely changed. In terms of AI specifically, do you see it being more used by the challenger, sort of new market entrance audience, or do you see incumbents using it more, or is it a balance? What's your opinion on that?
So I'm a bit torn on this, Tyler. I'm 12 years in a traditional UK headquartered bank, and then last 2 years in a VC funded. I'm supposed to be on the tech side now, so I'm a bit torn on what answer I should give. Therefore, I probably will end up with the default balance. But let me elaborate a little bit more. when I started working outside Standard Chartered with a lot of fintechs in the last 2 years, as well as traditional banks, my initial expectation was that the usage of AI will probably be higher in the nimble competitors, particularly the neobanks, etc. And to some extent, that is correct. When you're building processes and systems from scratch, you start thinking in data native, tech native, and indeed AI native manner. But their footprint is relatively small. The vast majority of fintechs and even the neobanks that I'm aware of, including Standard Chartered subsidiary in Hong Kong, the new one in Singapore, and so on, by definition, they have relatively small footprints. Even if you take Revolut or anybody like that, they're operating with smaller number of customers, fewer products, maybe not fewer geographies, but certainly their scope is limited. That means that the problems they have to solve are fewer in number. So while the inclination to use AI might be, or indeed any new technology might be higher in the newer companies, the absolute amount of investment and the number of people building real applications and the dollars or the customer experience value that AI has brought is arguably much more in the bigger banks. And I won't take names, but there are European banks. There's at least one Southern European bank, one UK bank, one US bank, all of them clients or near clients of ours who have been totally blown away by the scale at which they're operating their AI. I've also worked with fintechs. We have fintech clients as well. There, it's much more a native way of thinking that this is the way we're going to work. Whereas with the bigger banks, it's more about how do you take something legacy niche and something legacy with legacy technology and processes and transform it from the inside using AI. So balance, but using AI in different ways with different starting points, if that makes sense.
Well, that was actually a very, very good answer. And I, as you said, I think it really depends on what kind of value you're trying to achieve. And in terms of that value, I mean, you sort of touched on this a bit in your initial answer, but in terms of the value that AI is able to bring to banking, I mean, what do you see that to be, and especially in terms of the benefits that the customer is going to feel personally?
Yeah. Well, it's good that you added that last bit to your question, because I think a lot of the low-hanging fruit value that I talked about, actually that accrues to the bank. You're making your processes more efficient and or effective, right? Possibly a little bit to the regulators because you get better outcomes. But what does it mean for the customers? So I think from a customer perspective, some of the investment into new technology, which might include AI in the onboarding processes and indeed on processing of transactions, certainly helps them. So whether it is the KYC example I gave, or if you don't get as many fraud alerts because a learning algorithm at the other end has figured out when, like next week I'm off to London. Yeah, when I use my card there, it knows that, well, after the first transaction, I'm not going to keep. So I guess to the extent that it improves the customer experience, whether it is during onboarding or subsequently when processing transactions, looking at fraud, looking at anti-money laundering, etc., that helps. That helps primarily by reducing the pain of doing business with the bank or the fintech. So that's one area. As I mentioned, the bigger benefit would be if I, as a customer, an existing customer of a bank, am able to access services that were beyond my reach. Now, that could be something like I'm getting a loan that I might not have qualified for earlier because I'm able to bring new data to the bank and they're able to process it in a way that they couldn't have done in the past. So, for example, and you see a lot more example of this in insurance, for example, where people might say, you did not give me a particular underwriting outcome, but actually, if you look at this alternate data I have about my additional income or about my health, are you able to update your models, or are your models able to take that and give me that credit or that insurance cover, even though the original model couldn't? That would be an example. And there are real life examples of this where primarily by allowing banks to use newer forms of data that they didn't use traditionally, it expands the set of services. I mentioned the wealth management example before. In the past, wealth management, private banking go quite close to each other, but the cost of providing wealth management, investment advisory services was always considered very high. The more you can automate that, including but not limited to AI, the more normal people can start accessing those investment services. So I think the second biggest area after kind of reduced inconvenience would be access to services that I otherwise would not have got. But I would repeat, the biggest benefit is to the people who are not even the customers. And again, it may or may not be felt as strongly in developed markets, but certainly across much of Asia, Africa, and Middle East. The biggest value is I did not have a financial services provider, and now I have one because AI has actually made it possible for somebody somewhere to serve me, whereas in the past they wouldn't have. That's probably the epitome.
I love your examples with wealth tech and insurance, and especially from my personal perspective, as somebody who's really monitoring the industry, it really does seem to be a trend that doesn't seem to be slowing down. So I think you've definitely really hit the money on that, and you've done really well to really describe the value and the benefits of AI. And as we discussed a little bit earlier, it is being applied across a spectrum of banks. And although their ambitions might be different, do you think that there are any challenges with the implementation of AI that these banks are sharing?
I assume it's a rhetorical question, given that we only have a small amount of time. But yes, of course, there's a ton of challenges. And let me focus on a broad screen first, and then we can zero in on the one area that I'm trying to help with our company. The first problem that comes, as you know very well, good AI or good machine learning models depend on having good training data. And so the first problem you'll hear people talking about, whether in banks or even in fintechs, is the lack of availability of data. A slightly different problem. Most fintechs don't have the data to build, so they have to get that data from third-party sources, etc. And kind of procuring that data in a safe way is the issue. But for most banks, they do have the data, but having the data in a form that can be used to train large-scale models is very different from having a piece of data in an operational system. So the availability and quality of data as a chief data officer, ex-chief data officer, I would say is certainly one big area of challenge. A second is indeed around talent. Now, typically people will say, oh, that's the crunch for data scientists and data engineers. Yes, there's a little bit of that, but actually that's not where the biggest gap is. The biggest gap is in the rest of the bank. You don't just want data scientists and data engineers in a bank or in a fintech who are going away and doing their own thing. You want the rest of the organization, everyone from the CEO downwards, the board, but also day to day, the person who's in charge of marketing, the person who's in charge of customer offers, the person who's in charge of credit, indeed, fraud, AML, all of them have to become more data literate, if not AI literate. And they've got to understand the full opportunities as well as the limitations posed by AI. Because what I see often and have seen in my past life as well is one of two extremes. You've got a bunch of people who have heard of AI, or for that matter, replace it with blockchain or anything else, and think the whole world has changed because of that. And then you've got another extreme, is like, I've seen this story before 30 times. Over the last 3 decades, I'm not going to change. You need something in between. You need people who are open and able to educate themselves on the possibilities, and yet skeptical enough to know the limitations. And you need them outside the CDO and CDAO teams, i.e. in the rest of the bank. So that lack of talent mismatch in some ways is probably a second big challenge. A third one is systems. Now, this is not, I think it's worth unwrapping this slightly. There's two different systems challenges. One is the area of machine learning in general is still relatively immature. So including us, there's a very large number of technology providers that are kind of offering a whole set of solutions. So making sense out of it all and saying, oh, this is my standard way in which standard tech in which that people will use to build models in the bank is one challenge. But there's another one. You can build a fantastic model, let's say for credit or fraud, and it works in theory, but you've got to deploy it in a credit approval system that is a decade old, or in a fraud system that is bought from a third party. How do you, as you probably know, this is called the last mile problem. How do you deploy that model in that last mile? That becomes a challenge. So these three we're involved in various ways, not so much the availability of data one, but certainly the second and the third one we help with. But the one that we focus on is the fourth challenge, which is trust, right? Now, we also have a lot of non-banking or clients, particularly tech first. I don't mean fintech, I mean like hardcore tech clients and partners. And there's a big difference, Tyler, between how they start their approach to AI and how banks start their approach. Banks start with, I've got a bunch of processes and tech that work. and you need to have a high bar before your AI-based solution is accepted to replace that. Whereas the guys in tech-first companies will come in saying, I have no existing processes, or like one gaming company we talked to last week said, I have 3 billion customers and 8 billion devices on which my product works. How do you expect me to do anything without AI? Of course, I have to use AI. So in tech first companies, this question of trust, it's an important one, but it's not an existential barrier. Whereas in banks in particular, the ability to trust what the AI is saying, whether it's a relationship manager saying, well, why should I listen to your recommendation on what I should sell to this corporate client, or a financial crime expert who says, nah, I don't actually believe the AI's prediction here, or a credit expert saying, yeah, this is what it says, but I don't want to pick that up. You have these humans who have deep expertise. You've got to do the work to convince them that the AI works better. You, of course, have to, I'm sure you'll come to this at point, you have to worry about the impact ill-designed AI can have on customer outcomes, whether you're treating them unfairly, unjustly, etc., unethically even. And then there's just kind of, AI is so dependent on historical database training that when the world changes with the interest rates now or with COVID earlier, do your models survive? Because you've kind of built something that is super tailored to the data that you use to train it, but now it might break as soon as the world changes, all right? Which you didn't have with traditional models as much. So these, again, slightly long answer, but these 4 blocks around data, tech, data, talent, tech, and trust. 3 of them are T's. I should find something for the D as well. So these 4 challenges are the big ones. We as a company focus on the 4th one, which is how do you build trust in AI?
There's a really fascinating answers, and I really agree with you that when the industry is approached by really contemporary technologies and solutions such as AI, there's always sort of going to be that level of hesitation and distrust towards it. And especially with what you were saying, with trying to convince people that it was capable and it was powerful in what they wanted to achieve. And I think back to, just circling back to that idea of trust, obviously there's a notion that that AI is going to produce like a biased result, right? Do you see AI bias as an equally important problem in the implementation of the technology?
I do, but as I wrote in a letter to the FT last week, AI can be biased, but so can humans, right? So I think to some extent, bias is an important consideration, and I do not want to underplay the importance of that, particularly given that our technology is partly to help address that. But in some ways, that's asking the wrong question. I don't know of any developer or data scientist who goes out of their way and says, I'm going to discriminate against a particular gender or sexual orientation or age group or nationality. No one goes out and says, I want to build a bias model. Not least because it's bad for business. Never mind the ethics of it. If I unnecessarily bias myself against women, which one of the models that our clients was doing, actually, it was a well-known fact that women were more creditworthy in that country. So your bias model is actually doing you commercial harm, never mind the ethical harm, right? So I don't believe I've met ever a data scientist who says, I'm really going to go ahead and build a bias model. What they're building is bad models, bad quality models. They're using either bad techniques, approaches to build those models, or more likely, like you said, there might be bias in the data that is used to train the model, and that's driving that. So I think the real challenge is model quality, of which the issue around unfair bias is the most obvious manifestation for the public at large. But it's actually not the most harmful manifestation, I would dare say, because the harm done from AI-based unfair bias, certainly in financial services, which is a narrow segment. I'm not talking about criminal justice. I'm not talking about the A-level results. Leave those aside, right? I'm just talking about financial services. The unfair bias that AI might introduce is far less than 2 other things. One, I would say, is probably less than the implicit human bias that has been there in past decision making. Banker in a small town making decision, bank manager making decision on whether to give you a loan or not. how do you make sure that they don't have implicit biases behind their piece, right? Same thing with recruitment, which is not a banking specific thing, but you hire people like yourself, you hire people you are comfortable working with. How does that bias get? So in some ways, I think by having algorithms spell out exactly how, or forcing them to spell out exactly how decisions are being made, and like in New York now, there's an algorithmic audit coming up for hiring, for example, where you have to explicitly say, these are my stats by gender, by race, whatever. Actually, you're shining light on this topic, and it's bringing it to the fore, but it's not much worse than human. So that's one thing I would say. The other thing I would say is that the bias problem is perhaps less than a broader quality problem. For example, when the world changes with COVID, or even with the chancellor's new mini budget, does my model stay stable? Because I had trained it with some historical data. So those issues of resilience of the model, transparency of the model, stability of the model are often more likely to cause problems than unfair bias in financial services. Now, that's still today, Tyler, keeping in mind what I told about the level of adoption. As adoption increases, yes, bias will become more prominent, but I think the way to solve that problem is to focus on model quality, not just on bias.
Mm. I mean, that's a really fascinating answer, and possibly not the answer I would have initially pointed to. So it's really important for anybody looking to implement these technologies to really take this on board. Just circling back again to, we spoke a lot at the beginning of our conversation about AI's use in financial inclusion and how it was opening up access to lots of underserved people, right? In terms of going a bit further into that, how do you think AI is pushing forward the rise of more personalized banking services?
Yeah. So, I mean, some of that is beginning to happen, and you might not necessarily see that as AI, but there's always been personalized marketing offers, etc., coming your way, not just in banking, in every other industry. I think what AI is allowing you to do, or newer technologies, of which machine learning is one aspect, is allowing you to do is, I think, two things. One, it is expanding the set of data points from which that personalization can originate. So in a crude way, your personalization would come based on, oh, you told us you're interested in foreign travel and wealth management, therefore I'm going to send you these. That's the crude original way of doing it. Now you might say, well, based on your behavior, based on the data you've permitted to share with us directly or through third party, or based on profiling others like you, we think you might like this. So you're more likely to get deeper insights when you have a broader data set. And the other point is kind of where you apply it. I think a lot of the personalization early on, and even now, to be honest, from my banks, at least the banks I bank with, is still based on what products I can sell you. I think to some extent, the personalization opportunity that lies ahead is not necessarily just selling you banking services. As you know, the ecosystem play is a big thing, and certainly it is in Asia. And actually saying, I'm not just here to provide you a banking service. Actually, if what you need just now is insurance, or is I don't know, actually insurers talk about how what you need is not an insurance package, but actually a way of managing your risk. Well, this allows me to offer more personalized services that go beyond, I want to sell you a product, right? That fraud example we had, Tyler, earlier, personalization can extend to fraud. If you know that Tyler travels around the world to various fintech festivals, and you're able to work out from that. I mean, if you do that, I don't know. But if you do that, well, maybe the AI can learn and say, let me not ping every time he's going to another city to be at another of these festivals, right? That's another kind of personalization. You might not think of it as personalization, but it is. They're knowing you better, or the AI is knowing you better and applying it to that. So I would say these are the two big shifts AI is allowing. More data sources to bring about that personalization. And the outcome of the personalization is much more than, I think you will like this product, and extends to, I don't think this guy's transaction is fraudulent or AML, or this person does not like communicating through this channel. So the first option I'll give them is the other channel, not this one. So on. Yeah.
Well, I mean, it really goes hand in hand with the ambition of the industry at the moment, to reach more people and give customers what they want from their banks. You know, so I really see it, as you've really emphasized in this chat so far, that it is able to achieve that and to give banks what they want from their customers if used in the right way. Now, if anything to take away from this webinar is that AI is a really contemporary but really understood form of technology, right? And I think what people are most excited about is its possibilities for the future. From your perspective, what do you see the future of AI in banking to be?
If I knew that very well, then I would have put my money there. So, but I will tell you what I want the future, what I would like the future of AI in banking to be, right? Which may or may not be where it will go. Look, any technology should ideally be a servant to what we need as humanity. It shouldn't be, it allows me to do X, so let me go away and make more money with X. It should be, what are the problems that we as a society face around us today, right? And when you start with that point, it will become quickly obvious that, you know, managing the vast inequalities that exist within and across countries, which kind of in our world in banking boils down to financial inclusion, but also it's not just I have to give loans to everybody. It's also I'm able to do that in a way that doesn't price out the certain customer groups, etc. So anything around reducing inequality by increasing access to financial services is, of course, a problem of our times. And the other, of course, has to be around environment. I don't mean ESG more broadly. There are very different considerations, some of that quite quickly political and you know, subjective. But at the least, we all know that if you are a bank, you do need to be able to understand the full implications of the financing you are doing or the investment options you are providing, right? And to the extent that better data and algorithms can help you trace that better, model that better, you know, what will happen if I fund this this power plant, right? Yeah, the immediate response is I should not fund this power plant because, and that is probably true now for most banks, because it's using coal. And yeah, but what was the alternative? Maybe the alternative is worse. And so I'm not saying AI helps with those ethical considerations. My point is, when you're able to bring in more and more data and provide reliable assessments to make on those considerations, you're able to get to better outcomes. So back to your question, Tyler, what am I most excited about for the future of AI in banking? The two areas where I hope it makes a huge difference is continuing this process of increasing access to financial services as a way of overcoming the huge inequalities we have in society. And two, just started, so all to play for. How do you play a role in helping banks and the banking industry play its best role possible on managing the environmental catastrophe that we have on our hand?
It's going to be a very, very exciting future for the industry, and especially for the use of AI. And I think, Shameek, that you've done a really, really good job to highlight all of that and to really bring that forward in this conversation. So Shameek Kundu, Head of Financial Services and Chief Strategy Officer at Truera, thank you so much for joining us today. And what a fascinating insight you've given us into the use of AI. Thank you very much.
Thank you, Tyler. Thank you for having me.